live session today, and actually there is a Q&A section, so please feel free to ask any questions that you have when you read the teaching materials. So that's the first thing. So please feel free to drop to raise your hand using the reaction function on Zoom, or you can post questions on the chat forum privately to me or for everyone. Or you can just unmute and then you can ask questions if you have any questions. So first, do you have any questions? Maybe you need some time to ask. So in the meantime, so I will summarize something about the lesson. Also, before we start the lesson, there's something there are few things I would like to let you know. The first thing is that I lecture 3 next week. We still learn it this time, but perhaps in the next 3 or 2 or 4 weeks, around 3 weeks, we will change schedule a little bit. So it means that you will I will post announcement on Moodle, also the time. But as I got some overlapping teaching schedule, that's why I need to reschedule the teaching time for around 3 weeks. So I'm really sorry about that. And please be aware of the change in the teaching schedule. It's happened for around 3 weeks only, 2 or 3 weeks only. Okay, so please check Moodles and the teaching schedule. I will update again on Moodle, and sorry for that again. Another thing is, as I mentioned to you last week, that I was waiting for the approval for your for the in-course exam, and finally now we got approval already. So I will post the example 3 questions on Moodle. One belong to easy group, one to moderate questions, and another will be hard level. So you will be able to know the level. And also, we conclude that there will be 10 questions at easy level, but 3 marks, 10 questions at moderate level. So it will, and each will be 4 marks and 6 marks for 1 hard questions. It means you can see the total percentage or the total marks will be 70 for easy and moderate. So, and 70 is the first for A5. Therefore, if you learn at the easy and moderate level, you still be able to achieve A5, but achieve higher need to spend more time with the easy questions. And because of that, so please arrange your time, and it will take time. Of course, it will take time to do this because it's open, and you will feel like under high pressure of time. Timing is quite challenging. Although when you sit alone and you practice, I don't think that those questions very challenging. So therefore, please spend enough time to learn and to read material, to know all things in at least teaching material, because everything in teaching material, but some point you need to read carefully to calculate. That's it for the announcement about the in-course exam. For the exam, the final exam, we still wait. We are waiting for approval, and when we got the final approval, I will announce. I will keep on announcing on the final one. This can be 2 questions or it can be 3 questions. That's it for the announcement. But I will hopefully next week I will be able to let you know information about the final exam. But in the meantime, at the moment, please spend time to learn for the in-course exam, which will account 20% of your final mark. I think it will be easy. It will be easy to pass, but it's not easy to get high mark under high pressure of timing. So please spend time to read and learn on that. Okay, that's what I would like to announce about first changing in schedule of in few weeks and also the in-course exam. Also, the final thing is that I checked the number of people who try to do the revision questions on Moodles, and I can see that so far there have been not a lot of students who try to do it. I think it's quite simple, and even I can see that the student can gain 20, maximum 100%. So it's very easy. So please spend time to do it and know the level and all the questions in easy level. So that's it. So for the easy level, remember the total mark only 30% still fail if pass or easy level. So spend time to do more moderate level. Maybe during this lesson will be at moderate level, and the later lesson will be at high level, or moderate and also hard level. Okay, so now we will start our revision or kind of the summary of lesson 2.
我走啊！你没看我一路输送你吗？要投你干嘛？走啊！我一直在输送你的。
Okay, so before we start the live session, do you have any questions based on what I just mentioned to you? If you have any questions, please feel free to ask me, or if, as I mentioned about the in-course exam, you can ask as well. Okay, so now we will start the live session 2. In this live session, what I want to focus again, perhaps you watched the video already, but in here I repeat again that the basic points we need to know in this lesson. First, we know the presentation of all financial statements, and we have different financial statements, and they got connection with each other, and they got different presentations. So it's in lesson 1A, and in lesson 2A, sorry. In lesson 2B, we need to know basics of accounting measurement, basic of accounting conventions, accounting for transactions, and accrual basics, and we also need to understand about inventory. And so go to the first point about basic accounting measurement. And actually the accounting measurements is just a set of assumptions and conventions which limit the information contained, and that 2 times at the very macro level or cover all aspects. This will be generally accepted accounting principles, and another will be conventional measurement basis. And now we go to the first point about generally accepted accounting principles. In short, we call it GAAP, and GAAP is a set of assumptions, conventions, and rules underlying financial accounting. And based on this assumptions, convention, and rules make financial statement, different financial statement have comparable characteristic, or is useful for user to make decisions. However, it's subject to significance constraint. Why it's subject to significant constraint, and also why what are constraint? Constraint in financial statement, we know that all this gap this gap provide a set of rules, but if firms follow this certain rules, firm only announce or only provide certain information based on these rules. But we want to know more information about firms. Some the information about, for example, certain information. We know that compensation structure is that the requirement to provide information about share base, right? So it's kind of the one of the requirement under GAAP. But if we go to further information in the compensation structure, there are a lot of information we still don't know exactly. Like we know that, for example, with different CEO, they have different they have salary, they have pension, they have options. We know in deep inside, and we that's based on financial statement, right? And also the further information that like based on option, and we also need to know when will those CEO will start to exercise, for example. And that information also required to be published on SEC, for example, in the US. So, and also in the UK, need to review information about insider trading, but only certain period. We don't know outside of that period to know, and we don't know exactly. For example, like I take a certain case of Pfizer, right? That's the vaccine company, and it's announced like after that company or the company announced about vaccine on the 6th of November, after the presidential election stop, and then on the 6th it stopped on the finish on the 3rd, right? But after that, on the 6th, the companies announced about that, and the companies announced information about vaccine, and after that the market realized that just 1 or 2 days after that, the CEO start to exercise the right, or that exercise that he sold a certain amount of shares, and it's quite huge percentage of share. And then suddenly the market start to confuse about that information, and then we ask whether that information is kind of whether the CEO manipulate like timing the market, and then announce on that day to exercise or not. And it's raised a question for us, right? But the point is, if we understand further about insider trading and the requirement, we know that the CEO or the companies announce about the activities need to be around in the window times, and and they got limit times about 3 to 4 months, and they realize actually the CEO of Pfizer announced register for exercise in July. So it's just in the window time that they know. So if we based on that information, we know that during from July to the window time 4 months after that, it will be around November, the CEO will trade. So that the limit in the content that we know that the requirement need to provide information, all the information must be kind of transparent for investor, but there's some certain limit in the information that we don't know when he will trade, or when could he trade at that time, right? We can guess that, or maybe from July to November there could be some information about vaccine, or the CEO of Pfizer could announce something, but we didn't know, and that the constraint of the information, or the constraint in on financial statement, the requirement from standards or from different part from regulators. Regulator try to force or try not force but try to help investor to get as much as possible information, but the constraint is that we still based on that, but there's still a lot of like corners that we don't know. So based on what an example I just mentioned to you, the point is that we should know those accounting principles. We should know rules, right? We should understand all of that information, and based on those information, we start to predict more. We start to get more. For example, like Pfizer. Back to the case of Pfizer, we know that July start to register, so there will be vaccine. Hopefully, at that time, if we guess or we hope that the information should be in 4 months. So we and of course, like speculate, right? We may invest. We may invest at that time. We may invest in Pfizer, for example, just to time. And before vaccine was announced, there were a lot of investors to invest in that. But if we know more about law, about like kind of on the regulations, we can read further, and we can choose which company we can invest or based on insider trading, for example. Okay, so maybe I go too far, but in general, what I want to conclude is that the general accepted accounting principles, that the set of assumption, conventions, and rules underlying financial accounting that helped investors to compare or to have more useful information, but of course it's subject to constraints in the contents. And different countries, they have different GAAP, like we call US GAAP or IFRS GAAP. So in general, it's just rules or conventions or assumptions. And that's the big one, that all the set one, all the big one. And now we go to into the more details that we call conventions. Conventions mean that we got different. So what is it? GAAP is the big one, and in the big one, go into the more detail inside that. So in this course, I would like to introduce 4 basic accounting conventions. They are the kind of the 4 main conventions that cover different aspects in financial statement and useful for us to understand. The first thing is accrual, and it's not challenging to understand this, right? Accrual basic is different from cash basic. When we think about accruals, we should compare with cash. And accrual basic require to record revenues or expenses in the same time that is occurred or it's happened, instead of when we receive the money or when we receive cash. Therefore, accruals reflects more about performance. But cash reflects about cash position. So the principle, another name of accruals concept is called matching principle. Why we call matching, and how can we remember about matching? Matching in here is that we just match the revenues and expenses in the period that is happened, right? In the period that occur. That's why it's called matching principle. And that is another name of accruals concept. So that is the first thing about accrual. To revise a little bit about this, so let's try what the first questions, like kind of an example for you to review this. So I would like to launch one. So stop here. Okay, so let's try refresh a little bit about accrual basic. And this will be at easy level. Please try it and then choose option based on your pool. Can you click on that? And please click, please read and let me know. Oh, it's also the way for me to know how many, the time that you spend on this. Time count, okay. Okay, stop here. So based on this, there so far 29 okay. Can you see the poll here? Can you see the result? Yes or no? Please, can someone say yes or no? Okay, thank you. So you see the result here, and I stop at 1 minute, and you will have 45 minutes for your in-course exam, and that's here 1 minute, and this at the easy level. Okay. And the question in here is using accrual accounting revenues of services render. So instead of mention about products, and here I use services. So services is record and report only when, if under again accrual accounting, we just record when it's happened, right? It doesn't matter when receive cash or not, and therefore in his 72%, it means 21 over 28 or 90 people got correct answer. So therefore, it's easy. Again, remember, using accrual accounting, we can only record when it's happened. Okay. Now, another question about accrual as well. Get star, please. Using accrual accounting, expenses are recorded and reported only. In this, I stop at 2 minutes. So the answer in here, 44% answer cash settlement take place with the delivery of the goods. But actually 20% of people got the correct answer. It's happened when expenses or revenue record when it's happened. So it means that when start to receive or the buyer receive a loan from the bank, so they record that and be careful of the questions. And now we move to
Oh, sorry. I just wanted to confirm. So the answer is the first one, right?
yes.
For this question?
Yes.
Okay. Thank you.
You're welcome. And it's just an example, and please try and take more tests or quizzes on Moodle. And this question is also at easy level. So yeah, thank you for letting me know about your speed and that. But all questions sent already, so please spend time to learn.
Sorry, can you explain the first answer, please, again?
Okay, let me say that. Using accrual expenses are recorded and reported only. In here, all the other three is mentioned when it cash settlement, right? Cash settlement when it takes place or cash settlement. So in here is only when the buyer receives a loan from the bank to pay for. So it's when I think I got problem with these questions. Let me check this and turn back to you. Sorry. Based on the exclude, it means that it's not cash, but I think I got problem with this. Sorry. Let's be check it at the end of the session, and then we'll confirm whether it's correct or not. Okay, I think I copied the wrong options.
Yeah, thank you very much.
Yeah, thank you for letting me know. I will check and I will explain. I think it's my fault. Sorry for your. Sorry and thank you for asking the question. Now we move to the second. The second one is about consistency concept. The consistency concept is the second basic accounting conventions. And in here, consistency, when we mention about consistency, is just make sure that we use the same accounting principle in 1 year to another year, or within 1 year, it should have the similar transaction. So it should be consistent. Now we move to prudence. Prudence kind of and another name of prudence is conservative. So therefore, we only record revenue when they are certain, and expenses when they are probable. So when it's really happened, or when we make sure that it's happened, we start to record. So that's called prudence or conservative. We more conserve about the case. For accrual, we record when it's happened only. We don't care whether it's certain or not, but prudence is not certain. And expenses, so it means it record when it's probable. And when something, and another aspect of conservative is when there's high risk, we also need to adjust. We record more expensive. We're not sure. In some case that we concerned about that, but when high risk, we start to record more expenses. But for certain revenue or assets, we feel like, we're not sure whether there will be high revenue or high assets. We record what smaller amount. So what does it mean? It means that for prudent concept, we normally or in general for prudence concept, we will not don't overstate assets and revenues, and don't understate expenses and liability. So it means that we must record something lower than, or like in the net effect must be got low amount. It means that assets must be small, liability must be high, or expenses must be high, and revenues must be low. That's about prudence or conservative. So please, now we try another questions about this, about prudence. Okay, please spend. Okay, this is correct. So please spend your time to read and choose option. Which of the following statement is not consistent with the fact that valuation must be made on a prudent basis? Remember, prudent is mean must be more conservative. Okay. I stopped already, and now we analyze this case. Which of the following statement is not consistent with the fact that valuation must be made on a prudent basis? So in here is not consistent, right? So we will analyze which one is kind of the incorrect or not aligned with prudence basic. For the first one, only profits concretely and definitely earned on balance date may be included. So means must something profit is kind of make sure and definitely it will appear. So therefore it's more conservative, right? It's not estimate. So the first one align with prudence. So with the first one mean that make sure the profit, right? So when we have profit, therefore is prudence. The second one, if the creation of excessive provisions or the deliberately overstatement of assets is allowed. So excessive provisions, or so provisions will be the excessive provisions, right? So provisions, so a lot of provisions or deliberately overstatement of assets. So is allowed. So it means that the assets must be higher. We can overstate assets. So we can't be like that. And excessive provisions. If excessive provisions, what happened? What the provisions? When excessive provisions, we will record as expenses. And when we record a huge amount of expenses, so we will have high amount of profit at the end, right? And that's opposite with the prudence. And therefore, option 2 is correct. So 46% got the correct answer. And now we analyze the next one. Account must be taken of all foreseeable liabilities and potential losses arising in the course of financial year concerned or in previous or of a previous year. So take into all account liabilities. It means that liability higher, right? It's so liability higher, assets is in general the net is lower, therefore it's also prudence or conservative. It means that we record more liabilities, more so therefore it's prudence. The final one, account must be taken all depreciations. And when we taken all the depreciations, it means that we record as expensive. And when we record as expensive, there huge amount of expensive, low amount of profit. In general, the net effect must be lower, and therefore it's also prudence or conservative. Therefore, question 46% got correct answer. This means the option B. Okay, and now we before we move a little bit, now we see that accrual is like we record a lot of prudent. We record revenues and we record expenses when it happened, right? And therefore accruals reflect more performance. And also when we think about accrual, another aspect of accrual is that it can subject to earnings management, and we will learn more about why it's related to earnings management in the financial statement analysis course that we will see each other in other course, and I will explain further for you in that. But we need to understand about the basic one about accruals in this course. Accruals mean record. Again, sorry that I repeat quite a lot of time, but we record when it's happened. And about the conservative is we or prudence is that we more conserve. We should not overstay assets. We should not overstay revenue, and we should not understay expenses and should not understay liabilities. So remember that the kind of two. Not completely opposite, but two aspects, and normally they use accrual to overstay, and they use the conservative to understay. And we will learn more about that later, and how market react to this we will learn later. So we move to. So in general, so far until now, we look at three conventions, accrual, consistent, and prudence. Now we move to the last one, that is going concern. Going concern is quite simple to understand. Going concern assume that firm will keep on operating, still survive in the future. That the simple way to explain about this. So that about going concern. And another thing is two basic assumptions of financial statement is that financial statement should record based on accrual basic and based on going concern assumptions or concept. They are two main basic of financial statement. Assume that must reflect performance, reflect performance to know what happened in that period, and to have user know and forecast more about the future. Know that when they be able to collect cash, when will firms need to pay cash, and how the certain situation at the moment affect the performance in general about accruals. And going concern help, of course, creditors and investors know that the firms still keep on operating in the future. or certain firm will not be bankruptcy. So that is two main assumptions. We have four basic accounting conventions that we should know. However, financial statement got two basic assumptions that we that need when report. And now about accounting transactions, very basic one, and I think many people know about this. That is about balance equations. Balance equations just assume that assets equal liability plus equity. Very easy, right? Assets reflect the use of finance. So, and liabilities reflect source of finance. And sources of finance in here, we look at liabilities and look at equity. Liabilities, we see debt. In general, if we look at long term, we see debt holder, we can see banks, and in a lot of long term, when we look at further financial statement, when we do financial statement analysis, we will see whether they will, in long term debt, whether firms will issue corporate bond or whether they will use private lending. In another term is private lending in here is whether they borrow from banks, and equity is whether and how many percentage in capital structure that they raise from capital market, right? Normally it's about 30 or 70% of it. I mean that debt to equity, the optimal point is different for firms that we learn in corporate finance. We know that different firms, they will have different capital structure, but in general, capital structure will not increase the value if they don't increase the value of the firms. If this firm don't generate more cash flow or more investment activities, right? And investment activities and cash flow is reflects in assets there, and that's form finance. But when we learn in accounting, we need to understand all the items, or not all the items, but main items. And we will go further into this, and I will help you when we analyze in interpretation in lesson 5, when we analyze more about working capital, about the way firms allocate financing sources. Okay, but the basic one is we know assets equal liabilities plus equity. Basic like this, but it's very helpful for us to analyze further. So now we go into the more detail about one assumptions that need to have in financial statement that accrual basics. All the transactions in financial statement based on accrual basic, and accrual basic also is defined by IASB. And again, it's record when it's happened. It's matching in that period. In only it's happened when revenue and expenses, and when revenue and expenses happened. And in accrual basics, because only record when it's happened, therefore there will be different at the time we receive cash or we pay cash, and therefore in this aspect we will look at the credit transactions. And credit transaction we will have like basic of accrual. The two main things of credit transactions. The first one will be just payable. Another one will be trade receivables. So for example, in this one, right, on the 1st of January, we purchased on credit, and then at the end of the year, settle debt to supplier. So at that time, at the end of the year, we pay, or the company pay cash. Therefore, if we analyze the first one, purchase inventory, so inventory increase in the assets here, and trade payable also increase. And at the end, when we return cash, so cash will decrease and trade payable will decrease. And here it just reflects assets and liabilities when we analyze, and we see the movement. Here we see that inventory increase and banks decrease. And here for transaction 1 here, and here for transaction 2. And that trade payables. Now we move to we sell or trade receivable. So on the 1st of January, sold goods to customer on credit, and on the 31st of January, we receive cash from customer. Therefore, trade receivable increased for transaction 1, and revenue also increased for transaction 1. And here is completely based on accrual basic, right? And trade receivable decreased after that when in transaction 2, when customer paid and we receive more cash. And bank in here, it means that it's go to the equity part here. Okay, and now we move to another aspect of accrual. Also, we'll go link with the previous one that called revenue. Revenue, as I mentioned in the previous live sessions, that revenue recognition is one of the points, one of the main points when analysts read financial statement. They also need to analyze about revenue. For example, like if you read news about Luckin company or Luckin Coffee company on last year around April to June, and Luckin is like growing company. Luckin Coffee was a growing companies, and Luckin attracted a lot of investor to invest in at that time. And to be honest, I was one of the investor at that time, because just growth is a growth company. But it turned out at certain point, realized that the market realized that, or SEC, the stock exchange commissions realized that there was manipulation. And what was that? The manipulation in here is they record or they overstay revenue, and therefore you can see that this one of the kind of the simple thing that just overstay revenue. The revenue is the first thing in the financial statement of profit or loss, or statement of comprehensive income. The first line is increase a lot of things there. However, there's still one of the most common point that companies can use to manipulate. And so we need to understand the way to recognize revenue. And to recognize, to record revenue must go to 5 steps. The first one is to identify contract with customer. After identify the contract, that means that sign the contract, like we buy something, it's got a contract and subject. And after that, identify the performance obligation in the contract. So in the contract, whether it's real or not, right? And in the contract, after we see in the contract that they firm got performance to deliver something, and we need to see the transaction price in the contract. And after that, we allocate the transaction price to the performance obligation. The performance obligation in here is that they need to have an obligation to deliver something, and then we need to see the price of that. We allocate that together. So that's step 4. And then after that, we start to deliver, and we start to have invoice, and have invoice to customer, deliver to customer, and at a certain point we record as revenue. And in short, when a firm can record revenue, a firm can record a revenue when customer start to control on that, start to have the right to control that. Okay, so it means that it need to set at a certain point, customer receive at a certain point, and then start to record revenue. So that's the process. Now just a little bit with the revenue. I also would like to launch this. Please read. And as I just mentioned, we have 5 steps to record. Now the question is, a service sold £250 on the 10th of March, and the service is carried out in March, but invoiced in the 10th of April and paid on the 31st of May. So there are two points at the time that start to sell on the 10th of March, and then invoice on the 10th of April, and then customer pays on 30th of May. So which point should we start to record? Should we record at the end of March when it's happened, or should we record on the day it's happened on the 10th of March, or when invoice, or when at the end of May, when paid? So we have 2 points in here. Okay, 36 pupil, 38. The result in here, I want, 30% pupil choose 10 April. That's the domination. So 30% of people got correct answer based on the 10th of April. And again, I explain why, right? The first step, we need to identify what the step one, they start to set it, right? And then we identify the obligation, and then we identify transaction price. So for the first three, it's simple. And after the transaction, after that, we allocate transaction price to the obligation. And finally, after that, we'll ascertain when the buyer, they got the control on that product, and then certifies the condition and start to record revenue. And in here, on the 10th of March, a service is sold. So it means that on that day, start to have the obligation. And carry out in March, it means that the service still happen in March, right? And it is invoiced on the 10th of April. So on the 10th of April, it's certain at that time, and then paid on the 31st of May, as based on the gross, right? So we don't care about the time to receive cash. So therefore, we can exclude the option on the 31st of May. So but on the 31st of March, it can be the time to record, but it's still not very certain. And it's carried out all the period, and until it's carried on the period until the end of March. But on the 10th of April, receive the invoice, it means that it's certain at that time. And when it's certain at that time, start to record the on record revenue. So when it's remember, when it satisfies all conditions, and when the buyer, they got control on that, companies issue invoice, then start to record at that time. Okay, another question, another poll. Another poll question here. And this is at the moderate level. A company named Demo prepare a financial statement. In which case the company can record revenue. The first one, agency sale of 250 and is entitled to a commission. The second, sale proceeds of 20,000. The third one, sale of 150,000 on 31st December, and the amount to and received was 100. Include 30% is done. The last one is sale of 200,000 on the 1st of January. And will be paid in full on the 31st of December. But paid in full on December 2021. Okay. And this is at the moderate level, so these two okay, I end here. And then here we have 45% got options of option 3, right? And the option 3 is the correct answer. Option 1 is agency sale of 250,000, and on which Demo is entitled to a commission. In here, sale of 250,000, but the company just received the commission, therefore will not record 250 as sales, right? The second option, sale process, no longer required, so therefore can't meet the requirement of revenue recognition. The third one, similar to the questions I just we just got, that when they sales and then they receive the invoice. After invoice, it means that it's certain, right? And the last one is also sales. However, don't mention about when received invoice or when the customer received or not. And also they just mentioned, so number 4, we don't have enough information to make sure that that's certain. Therefore, option 3. Okay, so that we finished for the first one. Sorry that we have only 1 hour live session only, but there's still some part that I still need to cover. If you have any plan, so you please feel free to go out to go out. So I don't mind about that. I'm sorry that is this session longer than I expected. Okay, now we move to another one and remember about inventory. This one part, this is one of the most straightforward treatments in under IFRS inventory. So in inventory here, we have IAS 2 inventories, that's the standard. So some point I would like to focus in here. The first one Okay, the first one, when we decide we want to calculate the inventory, we need to get the lower cost or the net realizable value. So we need to compare the cost of the inventory and the net realizable value of the inventory, and we choose the lower one, whether the cost or net realizable value. And we need to what is net realizable value, we will go at the later stage. So the cost of inventory the cost of inventories will include the cost of purchases. And in the cost of purchases, remember to read all of this, and because there will be questions about calculate, so you remember about that, which ones should include and which ones should exclude. And what we should include is that we need to include purchase price, also import duties and other taxes, transport and handling costs, and any costs directly attributed to the acquisitions of the goods. Also the cost of convention, and it also include fixed costs, okay, or overhead costs, and also other costs that bring inventory available to use. However, we will not include like wastage or convention any administrative or any like advertising or something, advertising costs or something. It's not in the inventory, right? So therefore, we will exclude wastage of administrative or selling costs. That's the way we calculate the cost of inventory. And another aspect of inventories, when it reflects on financial statement of comprehensive income or statement or income statement, is an item related to inventory that reflects on statement of comprehensive income is cost of goods sold. Cost of goods sold reflects also the value of the cost that we sell, right? So the difference between sale and cost of goods sold would be profit. And to calculate the cost of goods sold here, we will take the opening one, we plus with purchases, and then we minus the closing one. And this is an important formula. And remember this, please remember this. So in general, to sum up this formula, closing inventory at the end of the period, closing inventory is equal the opening one, right? At the beginning of the period, we have certain opening one. And during that, we have opening and we purchase something, and this opening larger, and therefore inventory larger. But during the year, we will need to sell out the inventory here, so it's smaller, and this amount smaller due to cost of goods sold. And the formula will be closing inventory equal opening inventories plus purchases and minus the cost of goods sold. So that, and this is just the way to calculate cost of goods sold. If you don't remember this, just remember the formula of closing inventory. Here is an example of cost of inventory. So you see that we have purchases, and then we have discount from trade discount, and then the cost now is 8,550, and we need to calculate taxes to include in that, and then direct labor cost, overhead cost, or fixed cost, and therefore that is the total of the final cost. Okay, any like advertising or administrative costs will not include in this. And the assumption to calculate the inventory is based on the historical cost. And if we base on historical cost, there are three methods. That is first in, first out. That assume that first in, first out. So the first we import in, that is the first we sell out, right? So that is first in, first out. The second will be last in, first out. Last in, first out, it means that the last we purchase in will be the first one we sell out. The last in, first out is not allowable under IFRS or IAS 2. Where in the US GAAP we can use last in first out in US GAAP. However, in IFRS, under IFRS standard, there's no last in first out. And another one is weighted. Another is weighted average. And weighted average in here is that we will calculate the average one. Let's take example of this. So in here we have at the beginning of the period, we have the number of inventory 0, and then purchase 1,000, and then after that purchase 1,200, and then we sold 40 here worth 1,050. So in here you see that we purchased, right, and then we sold, and then the requirement is that calculate the inventory. Here the inventory here is in total we purchase 50 and we sell 10, right? So at the end we have only 10. So if we calculate last in first out, means last in first out, right? No, sorry, first in first out first. First in first out. So it means that all come first, will be sell first, and the closing at the end we have only 10 left, right? And if we calculate the closing at the end, so we just take 10, we time with the last one at the end here, right? So the last here is 1,200 here. So let's see the weighting. So what the first in first out, he sold the closing one, he 10, and he is the late one, so we time here. And what this will be similar to the last in first out. And now I want to mention a little bit about the weighted average here, because I'm sure that first in first out and last in first out is quite not challenging to calculate. So let's go to the weighted average. The weighted average cost will be based on the average. So we have 20 worth 1,000 first, and then after that we purchase another 30 worth 1,200, and calculate based on weighted average. It means that we will calculate the average one. The average one here is in total we have 50 items, right? And the total cost of this 50 is 56,000. And to calculate the weighted average, we just take 50,000 here, divide by 50 items, and therefore we have a cost. The average cost is 1,120. And after that, we just take 1,120 here. We time what the 40 that the company sells. So we have the cost and the closing one here. The left one here is the closing one, and then we will have the closing inventory. Sorry, I think. And now net realizable value. Net realizable value in short it will be selling. We minus all the costs like trade, discounts, minus cost to complete minus the marketing, selling, and distribution costs. We will have net realizable value. You see, different from cost, when we calculate cost of inventory, we don't calculate marketing, selling, and distribution cost. But if we calculate net realizable value, we need to consider this. And it will be exclude, not add in. When we calculate the cost, right? The cost is when we make it available to use. And when it's available to use, we add all in the cost. But if we calculate net realizable value, is what the final value is. We exclude everything. So we will take the selling price minus this. So don't confuse between these two methods to calculate. Okay, so can you see here? So net realizable value, an example in here we have purchase price of machine W, X, Y, Z here. and we have purchase price, and we have selling price. Again, to calculate cost, right? To calculate or to identify the inventory cost, we need to identify the lower between the cost and the net realizable value. Therefore, I want to launch a little bit. Just bear with me about 5 more minutes and we finish. But look at the question here. We see the total purchase is 52.8 thousand purchase of all of this. And the question in here is it permissible to value the inventory of machine at the lower cost of total purchase price and the total net realizable value? I just mentioned to you, we need to identify, we need to so here is we need to identify the lower cost. So what do you think about this? And that's why I want to also emphasize to you. Okay, I will stop at 1 minute. So just guess that whether we sum all the value or not. In here, the result quite comparable. 15 people think yes, no, and 14 people think yes. In here, the question and the answer is no. Why I mentioned the total? We need to identify the lower cost, right? The lower cost. The lower cost, and in here is correct that calculate the lower cost. The lower compare between lower cost and net realizable value. But why it's not permissible? It's not permissible. Is that the total? We can't compare in the total. We can't compare the total purchase with the total net realizable value. We need to identify each item. When in the inventory, we have different items, and we will identify the lower cost of each, not the lower cost of the total. Okay, so be aware of this. So therefore, we need to identify the lower cost of the cost or the lower cost of net realizable value. And how to identify the cost and the net realizable value. Back to the net realizable value is selling price minus trade discount minus cost to complete and marketing. Therefore, in here we have the expected selling price here, and selling expenses are expected to absorb 4% of expected selling. So therefore, the 4% in the selling price here, and here is precondition of the cost incurred and expected cost in the future sale. And we compare between the cost and net realizable value. And in total here, we just take each item and the total value here is 54,520. That's where we record at the inventory in total. But when we need to value each item. Okay. That's it for the live session today. That's what I summarized all, and we have some certain activities. I will post. I will check the questions about the expensive, and I will post announcement on forum for you to make sure whether I prepare the correct one or not. But I'm sorry for that. So do you have any questions so far? So in 3 minutes, what I want to sum up today is we have basic accounting measurement. And basic accounting measurement, they are gaps and 4 basic conventions. And in this course, we focus on 4 basic conventions. And 4 basic accounting conventions, they are first, accrual, second, consistency, next, prudence, and then going concern. accruals record when revenues and expenses happen, or is based on matching principle. It's matched to the period it's happened. Consistency is that we should report it consistently. Prudence is we can't overstay, or we can't overstay assets or revenues, and we can't understay liability or expenses. And another name of prudence is conservative accounting. Then going concern is assume that firms will keep on operating at this in the future. And two basic assumptions on financial statement that they are accruals, accounting, and going concern. That about accruals. And then from accruals, we have we record pay on trade receivable, we record pay on trade payables, and also another aspect in accrual accounting, that is revenue recognition. And revenue recognition, in short, we will record when it's actually when the customer control it, right? Control the products, and when it's matched on the conditions that it must be, we have they sign the contract, they got performance obligations when they have transaction price, when the invoice issued, and customer got control on that. Then another aspect, or the final things we study, is about inventory. And based on IAS 2, inventories should be recorded at the lower cost and net realizable value. Which one lower, we record based on that. And we don't record at the total in the bulk of items. We should identify each items and sum up at the end. That about the general rules, record the lower cost. And when it's lower, another point is when it's lower, when a cost or net realizable value lower, we need to written down to the lower value. The way we take the lower one is we say it's written down. We written down to the lower value and calculate again. That about IAS 2 in general. And then based on that, we calculate the cost of inventory. Based on cost of inventory, we need to add up a lot of things, right? Cost of purchases, cost of fixed costs, and convention costs, cost of make inventory available to use. However, we will exclude administrative weightage and some like selling costs. Opposite net realizable value, we will take selling price and we minus all the costs, right, including the marketing and administrative administrative expenses to have the net realizable value. Also, that now another layers go into the cost. Based on the historical cost to calculate inventory, we have three approaches. The first one is first in, first out, last in, first out, and the last one is weighted average. And to calculate the last in, the first thing is we need to see all the purchase and calculate the last item, the inventory, the number of inventories, and take and match with whether that the first one, last in, first out, or first in, first out, we match. That's the way to calculate. And please read it and take some additional exercise on that. Finally is the weighted average. Weighted average, we need to calculate the total value of all purchases, okay? And then we divide to the numbers. And then we have the average cost. And after we have average cost, start to calculate back to inventories, closing inventories, or cost of goods sold. And finally, when linked to cost of goods sold, we need to know that closing inventory, that's the final inventory. So that, and closing inventory is based on, appear on financial position or balance sheet, and because on the balance sheet it's accumulate, right? So therefore, closing inventory equal opening inventory plus what something we add in that called budget, and then we minus the cost of goods. So that's something we use, and that finally we have the closing one. Yeah, that's it about the main idea of the live sessions. Do you have any questions? Please feel free to. Okay, so sorry for keeping you longer than the initial plan, and please feel free to ask me if you have any questions. And I will please update. Yeah, please follow news that I post on the forum about first the plan schedule of in the next 2 weeks. Next week still the same, but I think in I will change a little bit, but please remember to check. Yeah, and I will post the MCQ questions, the example of MCQ questions on Moodle, and please spend time to study. If you have any questions, please feel free to let me know. Okay. Yeah, thank you very much for your time, and hopefully you will have a nice weekend.
Hi.
Yeah.
I want to ask the question you showed me today. Can you share it with us?
Okay. Yeah. I can share with you. I will share on Moodle. Yeah.
Oh, thank you.
Yeah, I will edit. I think I got. I think the questions was. I prepared the wrong question, so I will update that as well. Thank you for asking me.
Okay.
Any requirements or something? I can see that you when we interact like this, well, we prepare, right? I somehow I could. I can know that how much time you spend for each questions. So so you also can know that, as I mentioned to you, as I sent for approval already. So therefore try to spend more time, because I think I will take some of the easy one in the next one for you to see again. How long will you take, and how long will you take to read a very, very easy one? So please spend time to learn, okay? And please feel free to request or ask me any questions. But do prepare for the in-course exam, because it will take time. It's easy, but it takes time for you to. You have only 45 minutes, okay? Remember that. So if 2 minutes question, 2 minutes for an easy question like today, so you spend already 20 minutes for 30 marks only. So please be aware of that. Okay, thank you for your time. Yes. Yeah. Yeah. Okay. Yeah. I can. The point is, what the difference between my slide today and the slide online. The slide online is just for me to record, right, and also for you to save time. Also, the slide today, some part I copy from the book, so with the example or something. But I will update the PowerPoint, the one we used today, for you, and add more. So I think that in here I deleted some slide, and I added some slide. So finally you will have more than the number of slides today. Yeah, thank you. So if you have any requirements, please ask me. Okay. and please try spend time for the in-course exam. This call is not challenging, but please spend time. I start to feel a little bit nervous after this. Okay, have a nice weekend.